Good morning, guys. Let us continue with our discussion of transfer pricing. What is the last question that we did the other day? That is question number 24, 25 ho gaya beta, 23 done, 22 done. So we are yet to discuss question number 19, question number 20 and question number 21. Let us start off with question number 19, guys. 1 9. Tripod limited as three divisions X, Y, and Z, which makes products X, Y, and Z respectively. For division Y, the only direct material is product X, and for Z, the only direct material is product Y. So, guys, X, whatever X manufactures, beta Y needs it. Whatever Y manufactures, Z needs it. Division X purchases all of its raw material from outside. Direct selling overhead representing commission to external sales agents are avoided on all internal transfers. So you do not have any selling sales agents commission when there are internal transfers. Division Y additionally incurs 10 rupees per unit and 8 rupees per unit on units delivered to external customers and Z respectively. So there's an additional transportation cost given better here of 10 rupees per unit and 8 rupees per unit on units delivered to external customers. Remember, you'll have to keep this in mind while you determine the minimum and the maximum transfer price. Y also incurs 6 rupees per unit picked up from X, whereas external suppliers supply at Y's factory at a stated price of 85 per unit. Y is incurring an amount of 6 rupees per unit, guys, that is picked up from X, whereas external suppliers is supplying it to Y, guys, at a price of 85 rupees per unit. Sir, how is that going to affect our answers? Simple है बेटा. 85 if that is the external supplier price for division Y, and if division Y has to additionally incur 6 rupees per unit on purchases from division X, then guys the maximum transfer price that division Y will be willing to offer is 85 minus 679 rupees. I repeat, the maximum transfer price that division Y will be willing to offer to X would be 85 minus 679 rupees. Additional information is given below. Direct materials external supplier price beta is 40, 85 and 135. Division Z beta incurs 135 rupees. Direct labor, guys, is 30, 50 and 45. Sales agents commission are 15, 15 and 10. Selling price in external market is 110, 170 and 240. Production capacity, external demand. You're required to discuss the range of negotiation. Range of negotiation for managers X, Y, and Z for the number of units and the transfer price for internal transfers. For the number of units and the transfer price better for internal transfers. We'll go one step at a time better. First, we'll talk about X and Y. Then we will move to Y and Z. We will move to Y and Z. So you guys read the question better. They're all similar questions. Read the question for a minute better. Try to understand the entire question. Then we will be moving on to the next part. Yes, guys. I hope you're all clear about this. I hope you're all reading the question, guys. Yes, beta. I think you're all done with reading the question. Let us now understand, guys. I hope you've understood, guys, what is the requirement here. The requirement here, beta, is to arrive at the range of transfer price. Yes or no, guys? That is what the question is all about, beta. Computing the range of negotiations, guys, for divisions X, Y, and Z, guys. For divisions X, Y, and Z. We all know, guys, as to how do we determine the range of negotiation. If you want to arrive at the range of negotiation as such, beta, range of negotiation. Remember, guys, it will always be minimum transfer price, beta. It's from the viewpoint of, this is from the viewpoint of receiving, sorry, beta, transferring division. I'm just writing this, beta, from the viewpoint of transferring division. This would be your marginal cost per unit. Marginal cost per unit, guys. Plus, if there's any other additional outlay, guys, any specific fixed cost as such, beta, that we are incurring because of this, and plus opportunity cost. Opportunity cost, beta. Whatever is the amount of opportunity cost. This would be the amount of minimum transfer price per unit. This is what we have learned, guys, so far. Maximum transfer price as such, guys. Maximum transfer price. Now this will be from the viewpoint of the receiving division. From the viewpoint of receiving division. Simple, beta. Let us not complicate this. From the viewpoint of receiving division, guys, you've always learned that it is lower of net marginal revenue. Lower of net marginal revenue, guys, and external buy-in price. And external buy-in price. यहाँ पे बेटा lower of this and would remain same because we are computing based on external procurement price only. We are all computing it on the basis of external procurement price, guys. So net marginal revenue and external buy-in price beta would remain same. ठीक है sir. Now guys, this is your range of negotiation as such, beta. Minimum transfer price, maximum transfer price. Understood, sir. We will have to decide about first, beta, between division X and division Y. First, beta, is between division X and division Y. This is the first thing that we are going to do. We will see, guys, as to how much is the spare capacity available in division X, how much are they willing to manufacture as such, guys, external demand, what is their contribution per unit, what are their external sales, everything, guys. Then we will determine as to what is the transfer price per unit if they transfer out of spare capacity and if they transfer by reducing external sales. Yes, sir. ये range of negotiation तो लिखो बेटा सब लोग. I'm sure you must have already written it, but still, guys, all of you write this range of negotiation, beta. Write down this range of negotiation. Yes, guys. Now, beta, let us see between division X and division Y, guys. We will now compute minimum transfer price, beta. Division X ka dekho, guys. Division X. What is the capacity, guys? You guys can do it with me, beta. What is the capacity, beta, of division X? The capacity of division X, beta, as you can see from the question, is 20,000 units, out of which, beta, out of which is such, guys, the amount of external demand. The amount of external demand. सामने रखता हूँ, beta, so that I do not have to twist my neck continuously. So yes, guys, the production capacity, beta, is 20,000 units, whereas the external demand, beta, is 14,000 units. Capacity is 20,000 units. External demand, beta, is 14,000 units. So sir, we have a spare capacity of 6,000 units. There is a spare capacity of 6,000 units. Yes sir. There is a spare capacity sir of 6,000 units. What next sir? What are the other things that you want to keep keep in mind? यहाँ पे देखो बेटा. What is the variable cost per unit guys of external sales? Do not forget beta that the variable cost per unit of external sales is different than the variable cost per unit of internal transfers. So this beta would be direct material cost plus direct wages plus sales agents commission. Plus sales agents commission. So that beta would be 40 rupees plus 30 rupees plus 15 rupees, that is 85 rupees. The selling price per unit guys of external sales, you can listen better for a minute. The selling price per unit of external sales guys is 110 rupees. So boss, we arrived at the contribution per unit of external sales. The amount of contribution per unit of external sales is such guys is 110 minus 85, that is 25 rupees. 110 minus 85 beta, that is 25 rupees. This would be the amount of contribution per unit of external sales. So guys, now what is the variable cost per unit of internal transfers? Variable cost per unit beta of internal transfers would only be direct material and direct wages. There are no sales agents commissions beta incurred on internal transfers. There are no sales agents commissions incurred on internal transfers guys. So sir, what are you trying to tell us? If you want to talk about minimum transfer price guys, if it is out of spare capacity, let us not forget beta that we have a spare capacity of 6,000 units. So this will only be variable cost per unit of internal transfers. Obviously guys, you will not take variable cost per unit of external sales. Variable cost per unit of internal transfers is 70 rupees. Yes or no? Yes sir. But then sir, what if I want to reduce external sales? Sir, what if I want to reduce external sales and then transfer internally? If you want to reduce external sales but and transfer internally, it would be variable cost per unit of internal transfers. It would be variable cost per unit of internal transfers plus contribution foregone on external sales. ऐसे सोचो बेटा that in the external market you can sell at 110 rupees, but if you transfer internally you will not incur 15 rupees. So 110 minus 15 is 95. Or to put it other way, 70 rupees is the variable cost of internal transfers. 70 rupees per unit is the variable cost of internal transfers beta. And if I transfer internally, I am also losing a contribution of 25 rupees for every unit of external sales. So this is 95. So I got minimum transfer price for both the cases guys. In case I have to transfer out of spare capacity, it would be 70 rupees. In case I have to transfer by reducing external sales as such guys, it has to be 95 rupees. It has to be 95 rupees. Understood sir? I hope you're all listening to me guys, and abhi sun lo guys. Let me just finish the entire part guys so that there's no confusion. This is guys, as far as division X is concerned, minimum transfer price. Now let us talk from the viewpoint of division Y guys, maximum transfer price. Maximum transfer price. First important thing beta is the supplier price. The supplier price as such guys. In case division Y procures component from external market. In case division Y procures component from external market. Component from external market. From external market. Let us not forget guys that the procurement price is 85 rupees. The procurement cost is 85 rupees. Question में देखो बेटा ब्रैकेट में दिया हुआ external supplier and ऊपर anyways दिया हुआ बेटा that someone is willing to supply to him at a stated price of 85 rupees. This will not be your maximum transfer price straight away guys. However, on internal transfers, division Y will have to additionally incur 6 rupees. Division Y will have to additionally incur 6 rupees. Additionally beta incur 6 rupees to procure components from division X. If they are procuring from division X beta, they will have to additionally incur 6 rupees. Therefore beta the maximum transfer price as such guys would be 85 minus 6, 79 rupees. The maximum transfer price as such beta would be 85 minus 6, 79 rupees. This would become the amount of maximum transfer price guys. प्रोक्योरमेंट कॉस्ट के अगर बेसिस पे लिए तो प्रोक्योरमेंट कॉस्ट के बेसिस पे लिए तो बेटा दिस इज व्हाट दे विल बी विलिंग टू ऑफर, येस और नो. If you want me to compute, guys, the net marginal revenue for division Y, net marginal revenue. I hope you remember the concept of net marginal revenue, beta. Net marginal revenue, guys, for division Y. So, what is the selling price per unit, beta, that they have to incur? So, selling price per unit, sir, is 170. Okay, sir. What is the amount of direct wages that they have to incur? 15, sir. What is the amount of sales agents commission that they have to incur? So, sales agents commission 15, sir. Apart from that, sir, if they sell it externally, division Y, sir, additional cost of 10 rupees on units sold to external customers. Delivery cost is 10 rupees. On external sales, they will have to incur a delivery cost of 10 rupees, sir. ये मैं नहीं बोल रहा हूँ, question बोल रहा है. 170 minus 50 minus 15 minus 10, 95 rupees. Net marginal revenue. Do you know what is the concept of net marginal revenue? It is excluding the cost of component. What is their revenue? What is their additional cost? Incremental revenue minus incremental cost would become their net marginal revenue. So their net marginal revenue here, beta, is 95 rupees. 95 rupees. So beta, we know, guys, therefore maximum transfer price would be, maximum transfer price as such, guys, would be lower of 79 and 95, and that is 79 rupees. Division Y, guys, will be willing to offer us only 79 rupees. Do not forget, guys, division Y has to incur 10 rupees per unit on external sales. Division Y has to incur beta 8 rupees per unit, guys, on internal transfers. Division Y has to incur 10 rupees per unit on external sales. Division Y has to incur 8 rupees per unit on internal transfers. Let us not forget that point, guys. Okay, sir. So this is their maximum transfer price as such, guys, at 79 rupees. Now combining, guys, after combining minimum and maximum transfer price, बेटा अपन को क्या आया? Minimum transfer price out of spare capacity, beta, we got 70 rupees. Out of spare capacity, beta, we got 70 rupees. Yes or no, beta? Yes, sir. And then, guys, by reducing external sales, as such, guys, we got a minimum transfer price of 95. Maximum transfer price as such, guys, is 79. So the answer is very clear, guys. Transfers from division Y, transfers from division X, transfers from division X to division Y will be made only out of spare capacity. Should be made, guys, undoubtedly. Will be made only out of spare capacity. Only out of spare capacity. So that is what a maximum 6,000 units. And the range of negotiation will be, range of negotiation beta for them would be, range of negotiation would be 70 rupees to 79 rupees. From the viewpoint of company also, guys, it is not viable beta that division X transfers anything more than 6,000 units because their opportunity cost is too high, guys. It is better that division Y procures it from the external market than division X is such better transferring more than 6,000 units to division Y. Understood, sir? अभी ये कॉपी करो बेटा between division X and Y. Like that बेटा we will have to now perform calculations, guys, for between division Y and Z as well. ये तो समझ में आ गया ना सर? हाँ सर. तो ये कॉपी करोगे सब लोग अभी. All of you better copy this between division X and division Y. Yes, guys, I hope you're all writing this. I hope you're all done with this. Now, division Y, guys. Division Y. Are you all doing this properly? ये हो गया ना बेटा सबका? Final this conclusion, guys. It should be in the range of 70 to 79. Yes, guys. If you're not done with it, pause and copy, but I give you a lot of time. Now let us proceed to division Y and division Z, guys. ठीक है बेटा, range of negotiation for division X and division Y done, guys. Let us now proceed to division Y beta and division Z. Division Y and division Z. We can write off beta from the viewpoint of division Z as to what is the maximum transfer price that is willing to offer as such, guys. Division Z के viewpoint से बेटा what is the maximum transfer price that is willing to offer. Please understand beta uske liye guys. What is the external supplier price for him? The external supplier price beta for division Z is 135 rupees. What is the net marginal revenue? What is the net marginal revenue guys? The net marginal revenue is such beta for them is selling price is 240 beta. They will have to incur direct wages of 45. They will have to incur sales agents commission. ये जो net marginal revenue है ना बेटा ये अभी अभी introduce किए. पहले it was not there only. Earlier maximum transfer price used to be directly external supplier price. In majority of the questions guys it is going to be external supplier price only guys. Very rare scenarios you will see beta that it is not viable for the other division to procure a component from external market and sell it in the market. Very rare scenarios. 10 guys. Is there anything else that they are incurring guys? ये जो 10 rupees and 8 rupees है that division Y has to incur, not division this thing guys. ठीक है बेटा. So this will give us net marginal revenue guys. Net marginal revenue. We took the selling price of product Z guys and then we deducted the incremental expenditures that they have to incur. And that is 185 rupees. 185 rupees. So guys, lower of the above. Lower. Therefore guys, maximum transfer price, the maximum that they will be willing to offer as such beta is 135 rupees. The maximum that they will be willing to offer beta is 135 rupees. Yes or no? Yes sir. The maximum that they will be willing to offer beta is 135 rupees. Understood sir? No doubt about it. No doubt about it. Okay. Yes sir. Now sir, what about minimum transfer price? Minimum transfer price. What is the variable cost per unit guys of external sales? Variable cost per unit of external sales. Do not forget to take that 10 rupees and 8 rupees into consideration guys. So this would be their direct material cost, direct wages. We know guys that division Y beta is not procuring at a stated price. There is range of negotiation as such guys. Variable cost per unit guys I will write. Remember guys, internal transfers as such beta can be from 70 to internal transfers. 70 to 79 is a range of negotiation. Yes or no? Yes sir. इसके अलावा बेटा they will have to incur direct wages of 50 rupees. Listen carefully guys. Let us not forget beta the division Y is procuring component X as such guys from this thing. Or beta if they're procuring it from external supplier as such guys it is 85. If they're procuring it from external supplier as such beta it is 85 guys. Component X. These are internal transfers. And this is from external supplier. They procured it from external supplier. Additional cost that they've incurred here beta is 6 rupees. Apart from that guys there is direct wages 50 rupees. Doesn't matter guys, you will have to incur this. And then guys there is this sales agents commission. Sales agents commission 15 rupees. Yes or no sir? I'm all talking about external sales as such guys. External sales. And then beta there is this transportation or delivery cost that they will have to incur guys, and that delivery cost division Y only has to incur. So all of this beta put together, their variable cost per unit guys of external sales beta would be. Variable cost per unit of external sales guys would be. The selling price per unit in the external market as such guys is 170. Yes or no? So their contribution per unit as such guys would be 19, 10 and 10. Just in case beta internal transfers, remember beta they can always procure 6,000 units as such guys from internal this thing beta. Range of negotiation is 70 to 79, 70 to 79 guys. ठीक है sir. Sir, what are you trying to prove from all of these calculations? One thing is for clear beta in all of these calculations is that the variable cost per unit of internal transfer, variable cost per unit beta when they procure component X from division X beta, it can range from 151 to 160 rupees as such guys, and if they're procuring it from external supplier it is 160. So these are the amount of contributions per unit that they are making. Correct sir? Yes. Now guys, even if division Y is procuring internally, even if division Y beta is procuring component X beta from division X, procuring S from division X, it will use such procurement for the purpose of external sales. Yes or no beta? They're making a higher contribution guys for the purpose of external sales. Yes or no? मतलब अगर वो लोग procure कर भी रहे बेटा internally, if they're procuring internally, don't you think guys they will use it and sell it in the external market? They're getting a higher contribution per unit. Yes or no? Yes sir. Now variable cost per unit guys, variable cost per unit for internal transfers, when X is procured from external market at 85, when X is procured from external market, they need X beta. So if X is procured from external market as such guys at 85 rupees, as such guys, so the variable cost for internal transfers beta would be product X beta is 85 rupees, direct wages beta is 50 rupees. There are no variable costs on internal transfers, but then there is additional delivery cost that they have to incur, and that is 8 rupees, 143. What is just happening guys? Forget contribution per unit guys, there is no way beta, as such guys that we reduce external sales beta to transfer to division Z, okay, because variable cost per unit of internal transfers itself is 143 rupees guys. There is no way beta that we reduce external sales and transfer to division Z. There is no way guys that we transfer even out of spare capacity. Let us not forget beta that the variable cost per unit out of spare capacity also will be 143. Now you will not be like, sir, what if division Y is procuring from division X at 70 rupees? Guys, even if it is procuring from at 70 rupees as such guys, don't you think it will utilize it for the purpose of external sales? Don't you think beta it will utilize it for the purpose of external sales? ऐसे सोचो beta. We all know guys that the capacity of division Y, is 30,000 units. 30,000 units. Yes or no? Yes sir. Out of which beta there is an external demand of 26,000 units. And then beta there's a spare capacity of 4,000 units. Out of this beta there's an external demand of 26,000 units and spare capacity beta is of 4,000 units. Understood sir? So if this happens guys, beta, so guys, if total production of division Y guys is 26,000 units only, undoubtedly beta they will procure 6,000 units of X from division X. Yes or no? Transfer price would be 70 to 79, plus of course they will incur 6 rupees on that. 6 rupees you have to incur guys, pick up additional cost. 20,000 units as such guys of X from external market at 85 rupees. This is what they are going to do guys. Yes or no? Yes sir. In case beta they restrict their total production to 26,000 units, they are going to buy 6,000 units from division X beta at a range of negotiation of 70 to 79. 70 to 79 plus 6 rupees they'll have to incur additional pickup cost. If total production of division Y, why am I giving all of this explanation in detail beta? When this question was originally asked as such guys, the answer of ICI was wrong, but then they removed it later. 6,000 units of X you're anyways going to purchase from division X as such beta, from division X. Range of negotiation is 70 to 79 plus 6 rupees transportation cost on that. Yes or no? This is their pickup cost, additional pickup cost that they have to incur. And they will buy 24,000 units of X beta from external market. At 85. You all know guys that even if they want to utilize their spare capacity guys to transfer to other divisions, the procurement cost of X beta would be 85. They will have to additionally buy 4000 units of X at 85. Yes or no? See guys, even if division Y wants to transfer internally, wants to transfer to division Z out of spare capacity, out of spare, even if division Y beta wants to transfer to division Z guys out of spare capacity, let us not forget beta, it has to procure X at 85 rupees. It has to procure X at 85 rupees. Look at that incremental cost beta. Isn't it procuring market for 80? So variable cost per unit guys of internal transfers, the variable cost per unit would be guys 143, would be 143. This is what we've computed now guys, variable cost per unit. But division Z beta cannot offer more than, division Z cannot offer more than 135. There can be no transfers, there will be no transfers guys, there will be no transfers between division Y and Z. There will be no transfers between division Y and Z, even by utilizing spare capacity. Please understand guys, no transfers even out of spare capacity. No transfers even out of spare capacity. Forget the fact that you will reduce external sales and transfer. Only spare capacity is also not useful guys. They're not going to make any money. So guys, let us understand this again. The variable cost per unit for division Y guys is 143, while the other division is able to procure it from the external market at only 135. From the viewpoint of company, from the viewpoint of divisions, it is not at all viable guys. We will not incur a loss bet of 8 rupees per unit just to transfer to them. It is better that they procure it from the external market. It is better that they procure it from the external market. Understood sir? ये जो contribution per unit compute किया बेटा, this is for your understanding. Variable cost per unit is only not relevant. ये तो करने की जरूरत भी नहीं थी फिर तो, कि why will they even transfer? Understood sir? Very good बेटा. Please write this. I hope you're understanding this guys. ICI का आंसर क्या था बेटा? Not to add to your confusion, they said if division Y can procure it 70 rupees from division X, they can use that as such better and transfer it to division Z. But my question is better, even if they do not transfer to division Z guys, don't you think they will use it to sell it externally better? They will have a higher contribution. Opportunity cost will be more guys. Opportunity cost will be more. This is why I presented this guys. So in case they want to increase their production from 26,000 units to 30,000 units, in case they want to increase their production beta from 26,000 units to 30,000 units, their additional procurement cost beta is at 85 rupees, not at 70 rupees. Their additional procurement cost beta is at 85 rupees as such guys. Even if division Y wants to transfer to division Z out of spare capacity, it has to procure X at 85, which means the total variable cost per unit will be 143. But division Z will not offer more than 135. This is where beta you should know. समझ में आ रहा है? Yes sir. All of you better write this now. Write this guys. In case you have doubts, please reach out. Write this guys between division Y and Z. basically, even if you do not present this detailed statement as such, guys, it would be fine. You will not lose anything in the exam. Yes, guys. Please check beta. Here guys. यहाँ पे लिख सकते हो बेटा ब्रैकेट में that this is utilized for external sales of Y. Utilized for external sales. Hope we're all done with this, बेटा बहुत ज़्यादा टाइम दे दिया, ठीक है. Just in case you have any doubts or such, guys, you can always reach out. Now let us proceed to the next question, guys. We will now be solving question number, ये कौन सा था, 19. We will come to question number 20 that got asked in the examination, guys. We will do question number 21 that was there in the ICI study material first, and then we will see better as to how this question is different from question number how different is question 20 better from question number 21. Now question number 21 better. B Limited. B Limited makes three products, guys, X, Y, and Z in divisions X, Y, and Z respectively. The following information is given. X, Y, and Z, but a direct material per unit excluding material X for divisions Y and Z, 822 and 40. 822 and 40, guys. Direct labor beta rupees per unit is 4, 6, and 8. Variable overhead beta variable overhead is 2 rupees per unit. Selling price to outside customers is given by 25, 65, and 90. Existing capacity is 6,000 units for division X, 3,000 for division Y, and 3,000 for division Z. The maximum external demand is 5,000 units, 5,500 and 5,000. Additional fixed costs that would be incurred, guys, to install additional capacity. Maximum additional units that can be produced by additional capacity. So, guys, one new point here. We have an option of increasing our capacity as such, but the capacity of division X is 6,000 units, we can increase the capacity of division X beta by another 6,000 units. By another 6,000 units, guys, that it will become 12,000 units. And to increase the capacity by another 6,000 units, all we have to do beta is just incur 45,000 rupees. All we have to do beta is just incur 45,000 rupees. Do not forget beta that the external demand for division X is 5,000 units. Because the external demand beta is 5,000 units, we would be able to have a spare capacity of 7,000 units due to this fixed cost, guys, and then we can decide beta whether we should transfer internally or not. For division Y, guys, again the capacity is 3,000 units, guys. You can increase it by another 2,000 units, and then we have proper market demand for that, guys. The market demand as such, guys, is 5,500 units. 5,500 units. So even if you increase the production capacity by 2,000 units, your total production capacity is going to become 5,000 units. 5,000 units as such, guys, and based on that beta, yes, it will be beneficial. Division Z, guys, 3,000, 5,000 and 2,250, guys. So that is, again, we can increase the capacity by 2,250 units, guys. So total production capacity will become 5,250 units, but then the demand is only 5,000 units. No problem, guys. Y and Z need material X as their input. Different from the previous question, guys. In the previous question, it was X to Y and then Y to Z. Here, guys, Y and Z need X as their input. Y and Z need X as their input. Material X is available in the market at 23 rupees. Defectives can be returned to suppliers at their cost. Division X supplies material free from defects and hence is able to sell at 25 rupees per unit. So guys, there is a similar product available in the market at 23 rupees, but then because we are selling a defect free product, we are able to command a higher price, guys, and we are selling it at 25 rupees. Each unit of Y and Z requires 1 unit of X with slight modification. If Y is purchasing from outside at 23 rupees per unit, it has to incur a modification and inspection cost of 3 rupees. If Y purchases from division X, it has to incur, in addition to the transfer price, rupees 2 per unit to modify it. Rupees 2 per unit to modify it. If Z gets a material from division X, it can use it after incurring a modification cost of 1 rupee per unit. If Z buys material X from outside, guys, it has to either inspect and modify it at its own shop floor at 5 rupees per unit, or use idle labor of division X at 3 rupees per unit. Division X will lend its idle labor as per Z's requirement even if Z is purchasing materials from outside market. The transfer prices are at the discretion of divisional managers and will remain confidential. Assume no restriction on quantities of interdivisional transfers or purchases. Discuss with relevant figures the best strategy for each division. Best strategy for each division and the company as a whole. Very nice question, guys. We will target one point at a point at a time as such, guys. Read the question properly, guys. Lot of information has been given. Read the question properly better. All of you guys do read the question properly. Do read the question properly, guys. Are we all clear about this? I'll wait for a minute more, guys. Then I'll start explaining the question. Then I'll start explaining the question, guys. Chalo guys, in case you're not done reading the question, guys, do pause the video better. Do pause the video. See guys, there are few important decisions that are to be taken here. First important thing beta is, okay boss, what will they do with the increase in capacity? Are they going to increase the capacity or not? Are they going to increase the capacity or not? I hope everyone has the materials right in front of them, guys. You're doing question number 21. Are they going to increase capacity or not, beta? We have to answer that question. We will have to answer that question. So guys, how do we answer that question, guys? Pay attention. For division Y, guys, for division Y as such, guys, just to know better whether increasing capacity is viable or not as such, better. Increasing capacity is viable or not. हाँ guys, एक important चीज जो है बेटा क्वेश्चन में ये अंडरलाइन करना. The transfer prices are at the discretion of divisional managers and will remain confidential. मतलब guys, you can transfer at different prices to both the divisions. Underline that statement better, that it will remain confidential. It will remain confidential. Last line, guys. Now if you talk about division Y, guys, division Y, it can procure X better from external market. It can procure X better from external market at 23 rupees. Yes or no? At 23 rupees, and incur additional modification cost of 3 rupees. Additional modification cost of 3 rupees. Yes or no? So effective cost as such beta would be 26 rupees. Effective cost beta would be 26 rupees. Now if you want to know better the maximum transfer price that they are willing to offer, guys, maximum transfer price, remember guys, the effective cost of division Y has to be 26 rupees only. So that will be transfer price plus, do not forget guys that division Y still has to incur modification cost on internal transfers. Modification cost on internal transfers they still have to incur better, and that is 26 rupees. Sorry, 2 rupees as such. 2 rupees here, na? Yes, better. So the maximum transfer price is such, guys, that they will be willing to offer for internal transfers is 24 rupees. The maximum transfer price is such that they will be willing to offer, guys, is only 24 rupees. They will not offer anything more than that. Let us not forget better that their net marginal revenue will be much higher. Net marginal revenue better will be higher. So net marginal revenue को ignore कर सकते हो बेटा. You can just directly take on the basis of procurement cost. On the basis of procurement cost. So guys, division Y is such beta, maximum transfer price is such beta would be 24 rupees. They will not offer us anything more than 24 rupees as such, guys, as far as division Y is concerned. I repeat guys, division Y can procure component X from external market at 23 rupees. Correct sir? Correct. Once they procure this component from external market at 23 rupees, they will have to incur an additional modification cost of 3 rupees on it. They will have to incur an additional modification cost of 3 rupees on it, which will increase their total cost of procurement to 26 rupees. In case they are procuring it better from division X, they will have to incur a modification cost of 2 rupees. They will have to incur a modification cost of 2 rupees as such, guys. ऐसे सोचो बेटा. From if division Y beta, if division Y purchases X, from external market, purchases X beta from external market, their cost beta would be 23 plus 3. Internal transfers as such, guys, internal transfers would be whatever is the transfer price plus 2 rupees. whatever is the transfer price plus 2 rupees. Obviously beta they will want to incur, they will want to not incur more than 26 rupees as such, guys. So this is the maximum that they will offer, sir. Boss, 24 rupees is the maximum amount that they're willing to offer. Okay, sir. Very clear about it. Very clear about it as such, guys. Very clear. Now guys, if you see guys whether they will increase capacity or not, whether division Y beta will be willing to increase their capacity by, should we answer that point also here only? So we know guys that division Y beta maximum transfer price is 24 rupees as such, guys. तो ये रहेगा. What would be the contribution per unit beta for division Y based on procurement cost of 26 rupees, based on procurement cost of 26 rupees. Whether it is internal transfer or external sales beta, their procurement cost would remain at 26 rupees. Yes sir. तो यहाँ पे कितना आ जाएगा बेटा? इस direct material is 22 rupees, X beta is 26 rupees, variable overhead, sorry, wages are 6 rupees, variable overhead as such beta is 2 rupees. All put together beta will be 22, 26, 6 and 2 beta is 56 rupees. Their selling price per unit beta is 65. The contribution per unit beta is 9 rupees. Contribution per unit is 9. Sir, why are you doing this? Please understand guys. The additional cost of increasing capacity, by 2000 units, by 2000 units beta is for 9000 rupees. The incremental contribution that they're going to get, even if they do not procure it from division X beta, forget division X as such guys, even if they procure it from external market at 23 plus 3 rupees, 26 rupees, they are going to get a contribution of 9 rupees per unit. The incremental contribution beta from those 2000 units will be 2000 into 9 beta, 18,000. They will be able, so there is enough external demand beta, there is enough external demand as such guys to sell additional 2000 units. In fact we have more than that beta, to sell additional 2000 units beta. We have enough additional capacity guys. Just say beta right now guys, their capacity, existing capacity is 3000 units, whereas your external demand as such beta, guys is 5500. So if capacity is increased by 2000, we can sell the entire 2000 units. External demand is 5500 guys. So even if we increase the capacity by 2000 units guys, we would be able to sell the entire 2000 units. So this was about division Y guys. Here I have clearly stated as to what is the maximum transfer price. So 24 rupees देने को ready है वो, and based on that guys, their procurement cost will not go beyond 26 rupees of product X as such guys, and they will get a contribution of 9 rupees per unit. In case they plan to increase their capacity by 2000 units, they will get an additional contribution of 18,000, and there guys fixed cost is only 9,000 rupees. So yes sir, they should capacity should be increased as such guys. Capacity should be increased. वो conclusion तो लिखा ही नहीं मैं. Capacity should be increased guys. Additional contribution is 18,000, fixed cost is only 9,000. Write this guys, then I will talk from the viewpoint of division Z as well beta. Once we finish division Z guys, then we will be moving on to division X. Please write this guys. लिखो बेटा ये सब. All of you write this guys. Write this beta, then we will target division Z. Finish this guys properly. I hope you're all done with this part, guys. Here, better copy this. I hope you're all done with this. Finally, better copy this. All of you guys, copy this quickly. I hope you're all done with this, beta. So this was about the decision for division Y, guys, that they have to increase the capacity, beta. They have to increase the capacity, okay? And the maximum transfer price, beta, that they're willing to offer is 24 rupees. Now let us think from the viewpoint of division Z, guys. Division Z, beta. Z के पास क्या है, guys? Division Z can procure from external market. Division Z, beta, can procure from external market. Can procure, beta, from external market. At what price, guys? External market at 23 rupees, guys. And plus, beta, the modification cost and inspection cost that they have to incur as such, beta, is 5 rupees or 3 rupees. It has to either incur 5 rupees on modification, 5 rupees on modification, guys, or pay 3 rupees to division X for utilizing labor, for utilizing idle labor, for utilizing idle labor, guys. यहाँ पे बेटा comes assumption, guys. You will have to assume बेटा that division X will not have any idle labor, guys. Division X beta will not have idle labor if it is operating at full capacity. Division X beta will not have idle labor. Will not have idle labor beta if it is working at full capacity. If it is working at full capacity as such, guys. Yes or no? Yes, sir. Division X beta will not have idle labor if it is working at full capacity, guys. So their effective procurement cost, beta, their effective procurement cost as such, guys, can be written as. Alternatively, you can say, beta, that capacity utilization has nothing to do with labor as such, guys. In spite of having working at full capacity, they might have idle capacity. You can write that as well as such, guys. So effective procurement cost is 28 rupees. Effective procurement cost, beta, is 28 rupees. Yes or no, guys? If they procure, beta, if they procure from division X, if they procure from division X as such, guys, it will be transfer price plus 1 rupee. Plus 1 rupee, guys. I can write, beta, maximum transfer price plus this 1 rupee, beta, is on modification. 1 rupee, beta, modification cost. That 1 rupee as such, guys, is modification cost. Question mein hai, beta, division Z will have to incur a modification cost of 1 rupee, guys, if they procure it from division X. If they procure it from division X. So if they procure from division X, beta, their total cost, beta, would be transfer price, beta, plus 1 rupee. This maximum transfer price plus 1 rupee as such, beta, should be equal to their external procurement cost. It cannot exceed their external procurement cost. Yes or no? Yes, sir. In this process, beta, you will know that maximum transfer price plus that 1 rupee as such, guys, is equal to 28. You will get a maximum transfer price of 27 rupees. You will get a maximum transfer price, beta, of 27 rupees. Yes or no? Correct, sir. Maximum transfer price here would be 27 rupees. So once we realize, beta, that this is the case, do not forget, guys, the market price, guys, of division X product, as such, beta, is 25 rupees only. Is 25 rupees only as such, guys. So we can obviously, beta, we can consider beta transfer price as such, beta, to be 25 rupees. Obviously division Z will not want to pay more than market price. Division Z, beta, will not want to pay more than market price. Will not want to pay. He will say, beta, you are anyways recovering. तुम लोग अभी सोच सकते हो, बेटा, कि maximum transfer price from the viewpoint of company as such, beta, is 27 rupees, but division Z, beta, will not want to pay more than 25 rupees. He'll be like, भाई तू 25 rupees रख ले ना. You take this 25 rupees as such, guys, and then accordingly take a call. समझ में आ रहा है? Yes, sir. Now, guys, if division Z procures, I hope you're understanding, guys. Maximum transfer price is 27 as such, beta, but then we are considering a transfer price of 25. Sir, is it allowed that division X will transfer to division Y at 24 rupees? At 24 rupees as such, but then यहाँ पे they will transfer at 25. Allowed, beta. It is confidential. Question में बोला, beta, transfer price will remain strictly confidential. Will remain strictly confidential as such, guys. So it is perfectly allowed. Now, guys, if division Z procures X, beta, from division X at 25 rupees, ध्यान से सुनना, बेटा, please pay attention, guys. That direct material cost, beta, is 40 rupees. Component X is 25 rupees as such, guys. Modification cost that they will have to incur, beta, is 1 rupee. Modification cost that they will have to incur is 1 rupee, beta. Direct wages is 8 rupees, guys. Variable overheads as such, beta, is 2 rupees. All put together, beta, it would be 40, 25, 1, 8 and 2, beta, 76 rupees. Their market price, this is variable cost per unit. Their market price is such beta is 90 rupees. Contribution per unit beta is 14 rupees. Contribution per unit beta is 14 rupees. समझ में आ रहा है? Let us not forget beta that they can increase capacity. They can increase capacity as such beta. They can increase capacity by 2250 units. 2250 units beta. Their existing capacity is 3000 units. Existing capacity is 3000 units as such guys, and maximum demand is 5000. Maximum demand beta is 5000 units. So even if capacity is increased by 2250, even if capacity is increased by 2250 units, 2250 units is such beta. Remember, sales will increase by only 2000 units. Sales will increase by only 2000 units. समझ में आ रहा है नहीं आ रहा है? Even if capacity is increased better by 2250 units guys, sales are not going to increase beyond 2000 units. So here guys, our contribution, incremental contribution better, contribution incremental better would be 2000 into 14 as such guys, 28,000. We are deciding whether capacity should be increased or not. Whereas your incremental fixed cost beta is, incremental fixed cost is 23,100. Therefore beta capacity should be increased. Capacity of division Z also should be increased. Division Z beta should be increased. This is beta depending, should be increased. If division X beta, if X is procured from, if X is procured from division X, or what if X is not procured from division X? We will see later beta, don't worry. As of now beta, if X is procured from division X, they will have to increase their capacity. They will have to increase their capacity. If X is not procured from division X, I will consider beta what will happen if they procure from outside market, and if X has idle capacity, if X does not have idle capacity, all of that beta we will see. As of now guys, this is what you'll have to understand. यहाँ पे याद रखना guys, though the maximum transfer price is 27 rupees as such guys, division Z might pay only 25 rupees because that is the external market price for division X as well. Note beta, transfer prices are confidential. Transfer prices are confidential guys. So division Z will not complain. Therefore beta, transfer price to division Y is 24. Obviously वरना दोनों लड़ लेंगे ना, 24, and division Z beta is 25. Division Z guys will obviously not pay 27 rupees. It'll be like you're selling in the external market at 25. I'll in fact go and buy from the external market if that is the problem. I hope we're all clear about this beta. Now copy division Z details guys. All of you beta copy division Z details. सबके सब ये copy करो बेटा division Z के details अभी. Do copy guys. I hope you're all done with this. हो गया बेटा सबका ये? I hope you're all clear about this. Here guys, ये नहीं हुआ तो pause कर लेना. Now finally this part guys, please check if everyone is done with this. Do not forget beta transfer prices are confidential as such guys. That is why you have different transfer prices here. Understood sir. Finally beta we will now have to take a call beta regarding division X. Regarding division X as such guys. अभी ये देखो बेटा division X. Division X has three options guys. There are external sales. There are external sales. There is transfer to division Y. There is transfer to division Y. And then beta there is transfer to division Z. Transfer to division Z guys. The maximum demand or requirement as such guys, maximum requirement or demand as such better. As far as external sales are concerned guys, we cannot go beyond 5,000 units. Transfers to division Y guys, we know better that division Y has increased their capacity by 2,000 units better, so they will be willing to take 5,000 units. Division Z better, though they are increasing their capacity by 2,250 units, they cannot go beyond 5,000 units. Their existing capacity was 3,000. They've increased their capacity by 2,250 as such guys, but they will not be able to sell more than 2,000 units. Likewise beta they've increased their capacity by 2,000 units, and they will be willing to sell, they will be able to sell the entire 2,000 units guys, because the maximum demand is 5,500. So the selling price per unit guys, or transfer price, the selling price per unit or transfer price beta is, as far as external sales are concerned guys, it is 25 rupees. Transfers to division Y 24, division Z 25 rupees. Your variable cost per unit guys, you can directly add all of them but it is going to remain same. There are no changes guys, even if there are internal transfers. Direct material plus direct wages plus variable overheads, all put together beta is 14 rupees. So the amount of contribution per unit that they are going to get beta out of all of this, it is 11 rupees, 10 rupees and 11 rupees. So if you see guys, 11 rupees, 10 rupees and 11 rupees, yeah. Please understand guys, please understand. The incremental fixed cost guys of increasing capacity, by 6,000 units, of increasing capacity by 6,000 units, where is 45,000 rupees. It is 45,000 rupees. Now if capacity is limited to 6,000 units, if capacity is limited to 6,000 units, dhyan dena beta, if capacity is limited to 6,000 units as such guys, what they can do beta is external sales 5,000 units, internal transfers 1,000 units. Either they can have external sales 5,000 units guys, transfer to Z 1,000 units, or guys, or beta it can be transfers to Z 5,000 units as such guys, and external sales 1,000 units. Let us not forget beta, in both the cases, In both the cases as such, guys, their contribution is 11 rupees only, beta. So it doesn't make a difference, guys, whether they're transferring to division Z or whether they're selling in the external market. If capacity is increased, better to 12,000 units, capacity is increased to 12,000 units as such, guys, they will obviously sell in the external market, beta. There will be external sales of 5,000 units. There will be transfers to Z, guys, 5,000 units, 5,000 units. Balance beta would be transfers to division Y, only 2,000 units. Balance beta would be transfers to division Y, guys, only 2,000 units. Only 2,000 units. Balance beta would be transfers to division Y. So you see, guys, the incremental contribution is incremental contribution. On 4,000 more units beta, they are going to get 11 rupees. See, guys, all of this is at 11 rupees only, no? Here this is at 11 rupees beta. Here the contribution is 11 rupees per unit. Here the contribution is 11. Here the contribution is 10. So earlier they were getting contribution, guys, of earlier beta. These are all contributions per unit. Earlier beta they were getting a contribution of 11 rupees per unit on 6,000 units. Now they're going to get 11 rupees beta on 10,000 units, which means they're going to get incremental 11 rupees on 4,000 units. And also, guys, on 2,000 units they are going to get 10 rupees beta. So this as such, guys, would be 64,000. This beta would be 64,000. Whereas the incremental fixed cost as such beta is only 45,000 rupees. 45,000 rupees. Therefore, division X beta should also increase capacity. Division X also should also increase capacity. Remember, guys, questions like this beta, there can be a lot of ifs and buts as such, but in between you do not know whether a particular guys, situation is possible or not. It is just that beta, while you progress you will know. ठीक है, जैसे बेटा यहाँ पे division Z का जो अपन लिखे, all of this was calculation was dependent on division, they procuring it better from division Y. If they weren't procuring from division Y, their external procurement cost would have become 28 beta instead of 26 rupees, and their contribution would have reduced by 2 rupees. In spite of that beta, their total contribution would have been 24,000 and their incremental fixed cost would have been 23,100. But उतना डिटेल में जाने की ज़रूरत नहीं है. ये समझ में आया बेटा सबको? Division X should also increase capacity, guys. Incremental contribution beta from increasing capacity. So you are getting this beta. I hope you're all clear about this, guys. Please write this beta division X, and then we'll finally prepare a profitability statement, guys, and wind up the question. We will prepare a profitability statement, guys, and wind up the question. All of you better do this properly now. सबके सब बेटा ठीक से करो. Yes, guys, I hope you're all doing this properly. ध्यान से करना बेटा ये सब. Question is nice, बेटा. The next question is even more interesting that came in the examination. Yes, guys. लिखे बेटा है सब. I hope you're all also understanding this, guys. Yes, beta. Now this part, guys. इतना टाइम दे रहा हूँ बेटा क्वेश्चन करने के लिए. आई एम प्रेटी श्योर कपल ऑफ यू माइट फिनिश ऑफ दिस एंटायर क्लास इन 1.5 hours only. Doesn't matter, guys. What is more important is that you're understanding all of these questions. They randomly pick up any question, guys, and give up in the examination. Are you all done with this? Chalo, sir. Let us now prepare profitability statements as such, guys. Based on the information that we have. Sir, did he ask profitability statement? No, sir. And please understand, guys, all the decisions that we have taken are from the viewpoint of the company, because we've already taken maximum transfer price into consideration. We've already taken maximum transfer price into consideration, guys. Division X has external sales. Transfer to Y. Transfer to Z. Division Y beta has transfers from X and external purchases from external market, and they beta have transfer from the demand as such, guys, or the units. So the total sales of division Y, guys, are 5,000 units. Twenty-five, 24, 25, guys, in division Y, guys. 90 rupees. Variable cost per unit as such, guys. Remember, we've already computed better. पूरा वापस पूरा डिटेल में कर रहे guys. ट्रांसफर प्राइस तो यहाँ पे नहीं आएगा. यहाँ पे they're procuring at 24 rupees, 25 rupees. External purchases, they can procure at 23. They're not procuring. Modification cost, when they procure from division X, they are incurring 2 rupees, here 3 rupees, here 1 rupee. We've already known this, but 2 rupees, 3 rupees, and 1 rupee. Direct material beta that they've given us 8, 8, 8. I'm just presenting a profitability statement, guys. You guys can do this. We've already computed a lot of these details beta above. So your contribution per unit beta would be 10, 14, 11. Here 10 rupees, 11 rupees. 24, 6, 22, 2 and 2, 56, 65, 9 rupees. And this also should be 9 rupees only. And this beta would be 26, 10, 40, 14 rupees. Total contribution beta would be 55,000, 20,000, 55,000. This is for division X, guys. 1,30,000. Here 2,000 into 9, 18,000. 3,000 into 9 beta 27,000. Put together 45,000. Here 5,000 into 14, guys, 70,000. We do not know the entire information, but then we do know better that the amount of incremental fixed cost that this division is incurring is 45,000. Here it is 9,000 and here it is 23,100. Contribution net of incremental fixed cost. I cannot even term this as profit beta because but obvious there will have been other net of incremental fixed cost. Yeah, there would have been other cost also beta. This would be the answer, guys. Okay. All of you better please check the profitability statement, guys, quickly. We just took, guys, division Y if they're purchasing component X from transfers of X, or guys from external transfers. Check karo beta. Yes, guys. Are we all done with this? Yes, beta. Chalo, guys. I hope you're all clear about this. I hope you're all clear about this, beta. Everyone is done with this. Let us now move to the next question, guys. That's an even more interesting question. Question number 20, beta. 20th question, guys. Now, Trisel Limited makes three products X, Y, Z in divisions A, B, and C respectively. Division X is currently working at 60%, and Y is working at 80%, Z is working at 100% of the total production capacity. There will be a little inconsistency in the information given in the question, guys, but then we will have to work out as per the inconsistencies given only. The direct material cost beta for X is 10, 25, 35 excluding material X. Just like the previous question, guys, even here beta Y and Z would need as such, guys, material X. Direct labor is 6 rupees, 8 rupees, and 10 rupees. Variable overheads are 2, 3, and 4. Total production capacity beta is 15,000 units, 5,000, 2,500. External demand is more than production capacity or equal to this, except for X beta, where it is 7,500 only. The selling price to external customers is 30, 83, and 90 rupees, guys. The company has to incur an additional fixed cost of 9,000 rupees for every 10% of idle production capacity. For using every 10% of idle production capacity. Do not forget, guys, that division Y is operating at 80%, division X is operating at 60%. मैं क्यों बोला बेटा वो is there are a couple of informations as such, guys, that do not satisfy here. 1 second, guys. Yes, beta. The inconsistency that I was talking about, guys, here is that the question says division X is operating at 60%, guys. But then if you look at the external demand, beta, it is 7,500 units. Maybe, guys, prior to this you were operating at, 9,000 units. We do not know, beta. All that we know, guys, is division X is operating at 60% capacity beta, so they will have to increase their capacity utilization by 40% if they were to work at 100%. Simple, guys. Do not relate that to the amount of external demands. Mat dekho, guys. Because if I go by that beta, division Y as such, guys, should have been operating at 100%. Why are they even operating at 80%? God alone knows, guys. God alone knows. But then again beta, ignore the fact. And then division Z, guys. The company has to incur additional fixed cost of rupees 9,000 for using 10% of idle production capacity. Production capacity cannot be enhanced beyond total production capacity. Product X can be used as an input material for Y and Z. Product X is available in the market at 30 rupees per unit. Remember, we are selling it in the external market at 30 rupees. This is also available at 30 rupees in the external market. Each unit of Y and Z needs 1 unit of X beta as their input material. Every unit of Y and Z need 1 unit of X. X supplies the product without any defects, error free, guys, for direct use at shop floor without any further quality inspection to Y and Z. So in case beta division X as such, guys, is supplying this input to division Y and Z, they do not have to incur any further cost on it. They do not have to incur any further cost beta. If Y gets transfer of material from X, it can be directly used, but if it buys from outside vendor, guys, it has to pay 30 plus quality inspection charges of 2 rupees. Let us not forget beta that division Y, if they procure from external market as such, guys, they will have to incur 30 rupees plus another 2 rupees for inspection. So their external procurement cost is 32 rupees. But in case they're procuring with beta internally as such, guys, they do not have to incur that inspection charge. So maximum transfer price beta here is 32 rupees. But yes, the external market price for division X is 30 rupees. Z gets material from outside vendor at 30 rupees. If it buys from X, it has to slightly alter product X, which will cost 3 rupees as alteration cost. Z buys the material beta from outside vendor at 30 rupees. If it is buying from X as such, guys, they will have to alter. They will have to alter. They will have to incur 3 rupees. So Z will not pay more than 27 rupees. Y beta will be willing to pay up to 32 rupees also, but Z will not pay more than 27 rupees. Sir, why do you say that Z will not pay more than 27 rupees? Sir, can you throw some light on it? Z beta will incur 30 rupees when they are procuring this component from external market. Z will incur 30 rupees effectively, no further cost. But if they are procuring internally as such beta, they will have to incur an additional cost of 3 rupees. So there beta the maximum. They know, guys, that if they pay something to division X as such, guys, they'll have to additionally incur 3 rupees. With that additional amount of 3 rupees beta, it cannot exceed their external procurement cost of 30 rupees. With that additional amount of 3 rupees, guys, it cannot exceed their external procurement cost of 30 rupees. X wants to fix, ये है बेटा असली point of the question. It wants to fix a uniform transfer price. This is the main difference between question number 20 and question number 21. Apart from beta, they going a little wrong in framing the question. Of course, they should have said beta that the company is currently working at 50% capacity as such, guys, for division X. For division Y as such beta, they should have said that the company is currently working at 100% capacity. That should have been the right wording as such, guys. That should have been the right wording. But ठीक है बेटा, question frame करते करते थोड़ा बहुत गलत हो गए वो लोग. They wanted to change the question, but main point is this beta, that they want to fix a uniform transfer price for both division Y and Z. This price will be for divisional transfer only, and it has nothing to do with the outside sales. यूनिफॉर्म ट्रांसफर प्राइस में क्या होगा बेटा, डिवीजन Z विल से दैट आई विल नॉट पे एनीथिंग मोर देन 27. नाउ डिवीजन X बेटा, इफ दे वांट टू ट्रांसफर टू डिवीजन Y and Z, they will have to transfer to both the divisions at 27 rupees only. But you'll be like, sir, this is not fair. Division Z has to incur 3 rupees more. Division Y does not have to incur anything more. No if, no but बेटा, here you will have to charge a uniform transfer price. समझ में आ रहा है? I will explain about what is the different part about this question. This is what I told you beta. November 2020 paper, guys, when you looked at the paper, everything was simple. But then there were small changes in every question, guys, and that is where beta students, made mistakes. तुम लोग ये copy करो, copy नहीं beta, read the question. Now, if someone would have imagined the question that they've already done in class beta, they would have thought, ठीक है, confidential prices, सबको अलग अलग charge करो. They might have not seen this concept of uniform transfer price only beta. And because of that, everything goes for a toss. You will have to be very, very careful when you read the questions in the examination. Read every point in the exam. Got it, sir? Now all of you better read the question. Read the question, guys. Yes, guys. I hope you're all reading the question. Read the question properly, beta. Yes guys, I hope you all read the question. So first thing better here is, let us write better that this question has uniform transfer prices. Most important part of the question guys. The most important point better of this question is uniform transfer price. Sir, ये क्या है sir? So that these people do not fight among themselves as such guys. Uniform transfer price. The transfer price should be same better. The transfer price should be same for both the divisions. Transfer price should be same for both divisions Y and Z. The transfer price should remain same beta for both the divisions as such guys, Y and Z. Okay? Yes sir. Now I will finish off this part as such guys, and then I'll come to the other aspects. First we will decide as to what is the maximum transfer price that they are willing to pay as such guys. We can also talk about the minimum transfer price. Maximum transfer price beta for division Y. Maximum transfer price beta for division Y. तो guys division Y कितने में खरीद रहा है बेटा बाहर से? Division Y guys is procuring X from external market. Is procuring X beta from external market at 30 rupees. At 30 rupees. It also incurs quality is inspection charge of 2 rupees. Therefore guys, the effective procurement cost as such beta would be 32 rupees as such guys here. So guys, division Y can offer a maximum of 32 rupees guys. Can offer a maximum of 32 rupees to division X. Guys, याद रखना बेटा, all of these cases guys, the net marginal revenue is usually lower. You do not even have to check beta, you can directly write this. Net marginal revenue is usually lower. Division Y beta can offer a maximum of 32 rupees as such guys. 32 rupees to division X. Understood sir? Yes sir. If you talk about maximum transfer price beta for division Z, Division Z beta is procuring X from external market. Is procuring X beta from external market at 30 rupees. No additional expenses. There are no additional expenses guys. There are no additional expenses. However guys, if it procures from division X, it has to incur modification cost. Modification cost of 3 rupees. It does not make sense guys to have uniform transfer pricing when you know that one person has to incur modification cost as such beta. So transfer price plus 3 rupees cannot exceed 30. Transfer price beta plus 3 rupees modification cannot exceed 30 rupees. So here guys you will write transfer price as such beta cannot exceed 27. Cannot exceed 27 rupees. समझ में आ रहा है? हाँ सर समझ में आ रहा है. So your transfer price cannot exceed 27 rupees beta. Now guys, because of uniform transfer price concept, division X beta will have to supply. Division X beta will have to supply to both Y and Z at 27 rupees only. At 27 only. Normally beta it would have been differential pricing. Obviously beta division Y wouldn't have paid 32 beta. I would have said that anyways you're selling in the external market at 30 rupees only, so I will offer 30 rupees as such guys. But यहाँ पे division Z as such beta would not offer anything more than 27 rupees. And because of this concept of uniform transfer pricing guys, the overall transfer price to both the divisions beta will now be restricted to 27 rupees only. To both the divisions beta will be restricted to 27 rupees only. They cannot go beyond this transfer price of 27 rupees. But that's not the end of it guys. We will have to decide beta whether it is beneficial for them as such guys to expand capacity or not, as such guys expand capacity or not. We will see beta from the viewpoint of division X if it is viable for it beta to expand capacity and transfer, taking a transfer price of 27 rupees and taking computing, arriving at those contributions as such guys, contributions. ठीक है सर, ये लिख लो बेटा सब लोग अभी. All of you write this beta first. Everyone better write this first, and then we will come to that point of increasing capacity. So if you come to a conclusion beta that capacities can be increased, then beta we will see what is to be done. Yes guys, I hope you're all done with this. Now beta, we will have to decide whether increasing capacity better decisions. एक तो बोला पहले the question में inconsistency क्या है. What is the inconsistency in the question as such guys? Now you're not supposed to write this in the examination. This is only for our understanding. Inconsistency in question guys. Based on external demand, based on external demand and production capacity, division X beta, division X should have been operating at only 50% capacity. Division X beta should have been operating at only 50% capacity beta. How 50% capacity sir? 7,500 divided by 15,000 units. Lekin what is specified in the question beta? Question specifies 60%. We will take 60%. कहाँ से आया भगवान को ही मालूम. Likewise guys, similarly if you talk about division Y guys, division Y capacity utilization should have been 100%. Capacity utilization beta should have been 100%. Nice sir, what if they are unable to buy? If they are unable to buy as such guys from the outside market, they should mention that. No, in that case even the transfer pricing decisions are incorrect. No, because even the market price is not appropriate for you to take transfer prices based on that. Division Y capacity utilization beta should have been 100%. 5,000 by 5,000. Question specifies 80%. Question specifies 80%. Yes sir. समझ में आ रहा है? हाँ sir, we are trying to understand this. That the question is specifying only 80% as such sir, but then they could have operated at 100%. They could have operated at 100%. They were operating at 100%. But then guys, let us ignore them guys. Let us now talk about guys. If I talk about increasing capacity utilization guys of division X, if I talk about increasing capacity utilization beta of division X, याद रखना बेटा division X guys has three options now: external sales, transfers to division Y, transfers to division Z guys. Division X beta, maximum external demand as such beta is 7,500 units. Maximum transfers beta to division Y, maximum transfers to division Y guys would be 5,000 units. And the maximum transfers guys to division Z also beta would be 2,500 units, because their capacity is limited to 2,500. They might be having production capacity as such beta, but then their capacity is limited to 2,500 units, so they cannot go beyond that 2,500 units. Understood sir? So if this is a scenario guys, how am I supposed to arrive at how am I supposed to take a decision? वो तो लिख लेते हैं सर अपन, टेंशन मत लो. बट ये तो लिख लो गाइस तुम लोग, इनकंसिस्टेंसी इन क्वेश्चन, देन आई विल टो यू दैट. इनकंसिस्टेंसी इन क्वेश्चन लिख लो गाइस, सो दैट यू डोंट गेट कंफ्यूज व्हेन आई एम प्रेजेंटिंग द नेक्स्ट पार्ट हियर. ऑल ऑफ यू बेटर राइट दिस इनकंसिस्टेंसी गिवन इन द क्वेश्चन गाइस. लिखो बेटा जल्दी. Yes beta, I hope you're all done with this. I hope you're all done with this guys. सबका हो गया ना ये? Yes, guys. Now, guys, what will you do better? Increasing capacity utilization. Mein. Now, guys, assume division X is operating at 60%. Is operating at 60%. 7,500 external sales, guys. 1,500 किसको ट्रांसफर कर रही है नहीं मालूम है. 1,500 units internal transfers. 60% of 15,000 as such beta is 9,000 units. So those 9,000 is like this beta. 7,500 external sales, internal transfers 1,500. We have absolutely no idea as such, guys, whom are they transferring to as such beta, but because the question says they're operating at 60%, I will take 60% as such, guys. I will take 60%. Okay, yes sir. Now if you talk about contribution per unit, guys, if you talk about contribution per unit beta for division X, guys, division X, obviously guys, external sales ko to they must be giving preference to as such beta, because it is resulting in beta higher contribution per unit. Transfers to division Y, transfers to division Z, transfers to division Z, guys. ठीक है? Yes sir. So here beta, when I talk about transfers to division, selling price per unit, guys, in case of external transfers is 30, transfer price is only 27, guys. Variable cost per unit beta is direct material, direct wages, direct material, guys, direct wages, and variable overhead. So this beta is 10, 6 and 2 beta 18 rupees. Doesn't matter to whom are you transferring. So 12 rupees, 9 rupees and 9 rupees. Please understand, guys, please understand beta, if capacity is increased by 40%, if capacity is increased beta by 40%, that is 15,000 units ka 40% beta 6,000 units, 6,000 units. Our incremental contribution, you already met the external sales as such, guys. Your incremental contribution beta from additional internal transfers, you will transfer more as such beta to your own divisions from additional internal transfers. Your incremental contribution as such beta from additional internal transfers as such, guys, would be 6,000 units into 9 rupees as such beta, that is 6,000, 54,000. Whereas your incremental fixed cost beta would be, incremental fixed cost beta, it is 9,000 rupees beta for every 10%. 9,000 rupees for every 10%, guys. So put together that will be 9,000 beta into 4, 36,000. 9,000 into 4 beta 36,000. Therefore, guys, we know for sure beta division X capacity should be increased. Division X capacity should be increased. Division X capacity as such beta should be increased. That is the end of discussion, guys. They are making profit out of it. They are making profit out of it, guys. They will still be left with surplus, guys, if they increase their capacity by 40%, guys. 40%. समझ में आ रहा है? I took contribution per unit and I'm checking beta whether you are able to recover that incremental contribution or not, guys. Incremental fixed cost or not beta through the amount of incremental contribution. We're just checking beta whether they're able to recover that incremental fixed cost or not beta through the amount of incremental contribution. Understood, sir? अब डिविजन वाई देखो बेटा, डिविजन वाई गाइस, existing capacity utilization beta, existing capacity utilization is only 40%. So is only 80% as such, guys. So that is 5,000 units ka 80% as such, guys, 4,000 units. 4,000 units. It can increase capacity. It can increase capacity. It can increase capacity as such, guys, by 1,000 units, 20%. 20% as such, guys. Do not forget beta, external procurement beta, effective cost, external procurement, guys, effective cost was 32 rupees. Effective cost as such beta was 32 rupees, whereas internal transfers beta are costing them only 27 rupees beta now. Internal transfers are only 27 rupees, guys. 27 rupees. Yes or no? Yes, sir. तो यहाँ पे क्या होगा, sir? They are obviously in a beneficial position, guys. They're making more profit as such, guys. What is their contribution per unit, guys? The selling price per unit, guys, as far as division Y is concerned, guys, is 83 rupees. सुन लेना बेटा, कोई जल्दी में नहीं है अपन. Look at their variable cost beta. Direct material, guys, is 25 rupees. Component X beta is 27 rupees. Direct wages is 8 rupees. variable overhead beta is 3 rupees. So their contribution per unit as such beta would be 25, 27, 8, 3 guys, 63 minus 83, 20 rupees. Our incremental contribution beta, incremental contribution guys would be 20 rupees into 1000 units. 20,000 guys. Incremental contribution beta would be 20 into 1000 beta 20,000. Whereas your incremental fixed cost as such beta, incremental fixed cost for will be 9,000 into 2, 18,000. How 9,000 into 2 beta? 10% is 9,000 rupees. So for 20% as such beta, how much is the cost? Therefore, guys, division Y also should increase capacity. Should increase capacity. They should procure from division X beta because it is division because it is resulting in additional profits to them. Should increase capacity. Two advantages beta here. They should increase their capacity, guys. And the other reason beta is that their procurement cost, their contribution per unit is increasing, guys. Earlier beta they would have made only 15 rupees contribution per unit, but now that has come down to 27 rupees. So on mein aa raha hai? Yes sir. Please write this beta. This might be the reason, guys. This can be the reason as to why they were operating at only 80% capacity beta earlier. Ye copy karo beta now. All of you guys copy this. Division X also beta. Then we'll finally show division. We'll finally show beta division Z के बारे में. वहाँ पे capacity increase नहीं है beta, but we will see whether it is beneficial or not. I hope you're all doing this beta. Copy कर रहे हो ना अच्छे से? हाँ sir, copy कर रहे हैं. Do it guys quickly. Here beta, I hope you're all done with this. Now this contribution per unit. Yes, beta. You all doing this? Yes, guys. Are you all done? चेक कर लो बेटा जल्दी. Okay, guys. I hope you're all done with this. Yes, beta. Now, guys, from the viewpoint of division Z, guys, it doesn't really make a difference, beta. Division Z, guys, already operating at 100% capacity. Already operating at 100% capacity. Yes or no, guys? Yes, sir. No impact on cost. No impact on cost. Why no impact on cost, sir? External procurement or internal transfers. External procurement or internal transfers. If it effectively cost 30 or internal transfers will effectively cost 30. Will effectively cost 30 rupees. Are we clear, guys? Yes, sir. Now, basically, beta, what was the decision that we have taken, guys? They have asked us, beta, recommend the best strategy as such, guys. So finally, beta, if you talk about decision, as such, guys, final decision that I'm talking about, beta, division X should increase capacity, and transfer to division Y and division Z. Please understand beta, सुन लो guys, दो division Z, 1 second guys, an important. Yes beta, I'm sorry guys, कुछ तो बोल रहा था मैं. Division X should increase capacity beta and transfer to division Y and division Z. Please understand guys, though division Z is not being impacted, please understand beta, division X is making additional profits on it. Division X is making additional profits on such transfers. Yes or no sir? Yes. So isn't this optimal from the viewpoint of company? Optimum decision. Likewise beta, for transfers to division Y, both division X is making additional profits, division X beta is making additional profits. वो तो है ही है बेटा, additional profits, and division Y is also saving 5 rupees per unit, How 5 rupees per unit? Their external procurement cost beta is 32 rupees. External procurement cost beta effective is 32 rupees. Whereas their internal transfer price beta is only 27 rupees. So this is, yes beta, the most optimum decision from the viewpoint of the company, from the viewpoint of decisions. I am not presenting a profitability statement beta here, because there's a lot of inconsistency given in the question guys. So profitability statement is actually not required beta, because they did not ask us profitability. Okay, एग्जाम में profitability बनाया बेटा, वो भी incremental basis पे. तो what he did बेटा, under incremental basis, he took incremental fixed cost for division X for 40%, but he took existing volume at 50%. He took existing sales of division X as only 7,500 units, but then he took incremental fixed cost for only 40%. Doesn't make sense guys. Anyways, the requirement is not to present profitability as such guys. The requirement is only to give decisions, and this is very loud and clear beta as to what is the appropriate decision. सिर्फ एक के division के viewpoint से मत सोचो. Yes, division Z is already of course beta not being impacted in any manner, but don't you think guys, on those internal transfers division Y is making additional profits? On those internal transfers is such beta, division wise undoubtedly making additional profits. Please make a note of this guys, all of you beta, make a note of this, copy karo beta ye. And we are done with this question as well guys, let us write this guys, all of you. Please write these conclusions beta. समझ में आ रहा है बेटा? Pause and copy guys just in case you're not done with this. ठीक है? Yes sir. So guys, I hope you're all very clear about it guys. So that with that beta we are done with all the questions guys till question number 26 guys. We just have a couple of questions left from 27 to question number 35. I thought initially I might take 3 more classes, but let's see guys. 2 more classes. I also have to discuss the question paper and all guys. Pure question papers are covered guys, but by the time I'm recording this guys, obviously July 2021 question paper has also happened. The question from transfer pricing in July 2021 and such guys was simple. International transfer pricing guys, we're going to discuss that. We haven't discussed international transfer pricing yet. Last topic is international transfer pricing. We will be doing that. But now beta proposals for resolving transfer pricing conflict. We are now going to discuss a concept beta called as proposals for, we are done with transfer pricing methods. We are done with transfer pricing and goal congruence as such guys, as to what should be done for the purpose of decision making, minimum transfer price, maximum transfer price. Now proposals for resolving transfer pricing conflict. So guys, there might be situations as such guys where transfer pricing is leading to conflicts. Transfer pricing beta is leading to conflicts between divisions. Though division led rahe, they're fighting guys. Kortunaru. Kortunaru until little kotatlet guys. Ain't right there. So guys, yeah, I'll have to talk in Telugu a lot as such guys because the fluency is going off. Likewise guys, you'll wonder better, my Marwadi is also as such guys is going for a toss. I find it so difficult as such guys at times to talk in proper Marwadi. I have lost the touch guys. The only languages as such guys is that you frequently converse in Hindi, you frequently converse as such guys. If there were live classes as such guys, I frequently talk to students in Telugu also. So you remain in touch with the language as such guys and you have that fluency, you can talk as such guys. But gone beta, there are few things that are just going out of the way. Anyways beta, coming back to this guys, there can be conflicts as such guys, there can be conflicts as such beta between divisions as such guys. So for that beta conflict solving only, we have something called as a dual rate transfer pricing system guys and a 2-part transfer pricing system. Dual rate and a 2-part transfer pricing system. Dual rate transfer pricing system means as such guys, the transferring division is credited with something else only and the receiving division is debited with something else only. Imagine guys that I am transferring a product to you. Imagine better that I'm transferring a particular product to you as such guys at a price of, I'm transferring a product as such better to you. Dual rate transfer pricing guys, dual rate transfer pricing. See guys, there is this product X, as such beta. Division A beta is a transferring division. Whereas division B as such guys is a receiving division. Okay. Now guys, say the marginal cost as such beta. The marginal cost of this product is some 12 rupees. With margin as such beta, with margin or with markup as such beta, it is 20 rupees. So now what will happen beta here under dual rate is, as far as division A is concerned as such guys, they will write beta by transfers to division B at 20 rupees including markup. As far as division B is concerned beta, they will write 2 transfers from division A at 12 rupees. Division B as such beta would debit only marginal cost as such beta to their division B beta would only debit marginal cost as such beta to their cost. Whereas division A beta is getting a credit of not only marginal cost but also a profit, but also a certain profit margin as such guys on that marginal cost. Now this would ensure beta that there is appropriate performance evaluation of both division A and division B. But mind it guys, this system works perfectly fine only when either beta division A does not have an external market or beta division A guys has way too much surplus capacity. Otherwise beta if division B is debiting it beta with guys marginal cost and that is not in the interest of the entire company, it can result in suboptimal decision making. Advantages be a, disadvantages be a beta. Advantage beta is see, this will result in proper performance evaluation. Undoubtedly beta this will result in proper performance evaluation. Division A as such guys is being given a share of profit, so we can evaluate his profits properly. Division B on the other hand side beta can take appropriate decision, because while he is calculating his profit maximizing output, while division B beta is calculating their profit maximizing output as such guys, they are only taking the variable cost of the entire company. They're taking variable cost of the entire company as such, beta. They're not taking variable cost of their division. They're taking variable cost of the entire company into consideration. Are you trying to get the point here? Yes, sir. So division B beta will be in a much better position to decide what is the profit maximizing output from the viewpoint of the entire company and not just from the viewpoint of his division. We've always seen better the transfer price can have a negative impact on the number of units that can be sold by the company. Transfer pricing can always have a negative impact as such, but on the number of units that are being sold by the company. Yes or no? Yes, sir. I am repeatedly telling you, beta, division B taking a decision on the basis of overall marginal cost to the company as such, guys, would make sense only when there is no opportunity cost for division A. Only when division A has spare capacity, or only when division A as such, beta, does not have an external market. Otherwise, this would not make sense. This would not make sense as such, guys. Guys, we have been learning better that from the viewpoint of company also, guys, minimum transfer price is not always variable cost. It is variable cost plus opportunity cost. It is variable cost plus opportunity cost, beta. You cannot ignore that opportunity cost. I will ignore that opportunity cost only when we have spare capacity. I am stressing on that, guys. They've never tested this in the examination, but I believe they can test this in the examination, guys. That is, I'm telling you as to when can you use dual rate transfer pricing. When can you use this system of dual rate transfer pricing as such, guys? I hope you are understanding the implication here. The second disadvantage or the second drawback beta here of dual rate transfer pricing is it's too complicated beta to arrive at the overall profitability of the company. The sum total of profits made by divisions is never the profits made by the company. While you arrive at the profits made by the overall company, you will have to eliminate all of these artificial profits booked by division A. You will have to eliminate the artificial profits booked by division A, guys. Are we clear about this? समझ में आ रहा है? So what is dual rate? Dual rate under, guys, two rates. There are two rates being used beta in transfer pricing system. The transferring division beta has variable cost plus markup being credited, whereas the receiving division beta will debit only variable cost or marginal cost. Nothing else as such, guys. Like dual rate transfer pricing system beta, we have two-part transfer pricing system. We have two-part transfer pricing system. Like how we have dual rate transfer pricing system, two-part is not two rates. Two-part is not two rates. The transfer price has two parts. Transfer price has two parts. Has two parts as such, guys. And those two parts beta are variable cost plus a lump sum consideration. Lump sum consideration. This lump sum consideration beta will help the transferring division recover their fixed cost and make a reasonable amount of markup. This lump sum consideration as such, guys, will help the transferring division, guys, will help the transferring division make a certain amount of markup as such, guys. Advantage beta to the receiving division. Advantage to receiving division beta is that as the output is increased as such, guys, the incremental cost is only the variable cost of manufacturing. As the output is increased as such beta, the incremental cost as such beta is only the variable cost of output, guys, and not the entire thing. समझ में आ रहा है? As the output is increased as such beta, the incremental cost as such beta is only the variable cost. Beta, and nothing else. Okay, sir. We are very clear about this. Advantage to receiving division beta, they're procuring the output at a lesser price than the overall market price. But again, guys, I will have to ensure from the viewpoint of company as such beta that the proper recovery of fixed costs are being done or not. अपन क्या पढ़ रहे बेटा? Dual rate literally means two rates as such, guys. Two part under, guys, the transfer price has two parts. One is variable cost, the other one beta is lump sum consideration. Okay, sir. Write down the heading beta, proposals for resolving. Very, very important for the examination, guys. They can either give only this beta as a theory type of question or a comment type of question, or include this beta in every question. Practical question for 20 marks, 12 marks for computation, or 15 marks for computation, last 4 marks, 5 marks for writing this. That they are fighting, what can you do? Proposals beta for resolving. Proposals beta for resolving transfer pricing conflict. Proposals for resolving transfer pricing conflict. Proposals for resolving transfer pricing conflict. Proposals for resolving transfer pricing conflict. Write down, guys. Write down, beta. In many cases, in many cases, in many cases, transfer price can lead to conflicts between divisions, can lead to conflicts between divisions and result in suboptimal decision making. Result in suboptimal decision making. Suboptimal decision making. The following methods can be used to resolve conflicts. The following methods can be used to resolve conflicts. To resolve conflicts. Following methods can be used to resolve conflicts. Method 1 beta is dual rate transfer pricing system. Dual rate transfer pricing system. You're all supposed to write it with me beta. Dual rate transfer pricing system. When we say dual rate as such, guys, there are two rates involved. There are two rates involved. Involved as such, guys. Two rates involved beta. The transferring division, revenue credited will be variable cost plus margin. For the receiving division, cost debited will be marginal cost. Cost debited beta will be marginal cost. You're all supposed to write this beta. The cost debited, guys, will be marginal cost. Example, guys. Variable cost of product A is 12 rupees per unit. 25% margin. So transfer price is 12 rupees plus 25%, 15 rupees. 15 rupees as such, guys. Division A transfers to division B. When you're preparing profitability of division A beta, when they'll write by transfer to division B 15 rupees. Whereas division B beta will write to transfer from division A 12 rupees. 12 rupees, guys. To transfer from division A beta 12 rupees. I hope you're all writing this beta. Dual rate, two rates involved, transferring division, receiving division. Transferring division, guys, and receiving division. Yes, guys. I hope you are clear about this. I hope you are clear about this. लिख रहे हो ना बेटा सब लोग? This is the example, guys. Just in case you're not done with it, beta, please pause and copy this part. Yes, sir. Now, what is the advantage as such, guys? Advantage to division A. Advantage, beta. You think from the viewpoint of division A as such, guys. A reasonable margin. Will recover fixed cost. Also make profits. Yes or no? Also make profits. Division B, guys, can take decisions on profit maximizing output. Can take decisions on profit maximizing output based on marginal cost to company. Marginal cost to company. This is optimum decision making, guys. Optimum decision making. If you think from the viewpoint of overall company, beta, proper performance evaluation. Proper performance evaluation. Proper performance evaluation. Disadvantage if you see as such, guys. I would say beta can be used only if division A guys has spare capacity or no external market otherwise decisions cannot be taken on the basis of marginal cost. Decisions cannot be taken on the basis of marginal cost. Other disadvantage beta is that this would result in complicated records. To arrive at profits of company, we have to eliminate the artificial profits. Booked by division A. Eliminate the artificial profits booked by division A. समझ में आ रहा है? Yes sir. Check कर लो बेटा advantages, disadvantages. All of you guys please write this properly. You can pause and copy all of this beta. We are almost reaching the end of this class. Sure beta, pause and copy if you are not done with this. You can pause and copy beta if you're not done with this. समझ में आ गया? Yes sir. So this is for what beta? Dual rate transfer pricing. Then beta is two part transfer pricing system. I repeat guys, this is very important guys. मतलब दोनों conflict resolving. So here beta transfer price has two parts. Your transfer price as such beta will be equal to variable cost of units transferred plus lump sum consideration guys. What would be the advantage beta to division A? Advantage to division A beta is that lump sum consideration as such beta will provide for recovery of fixed cost. Lump sum consideration beta will provide for recovery of fixed cost and profits. For recovery of fixed cost beta and realize profits. What is the advantage to division B beta? Advantage to division B. Additional output procured will only cost additional marginal cost, will only cost variable amount. Additional output procured beta will only cost variable amount as such guys. मतलब for them incremental cost beta is equal to marginal cost. They do not have to pay anything. Lump sum consideration is fixed. Marginal cost as such beta. Remember their lump sum consideration is fixed as such guys, so they do not have to worry about it. ठीक है? Yes sir. So the overall cost to division B as such beta can be lower than the market price. समझ गए sir? Can be lower than market price. Right guys, all of you beta, टू पार्ट ट्रांसफर प्राइसिंग सिस्टम. लिख लो बेटा सब लोग. You're already done with it as such, guys. Let us move to the next question. I'll just read out question number 27. बेटा exact जो study material में बेटा वही है. Exact जो study material में बेटा वही है. I hope you're all done with this, guys. पॉज करके कॉपी कर लेना बेटा, नहीं हुआ है तो. आफ्टर दिस बेटा इज क्वेश्चन नंबर 27, गाइस. यू गाइस कैन गो थ्रू दैट बेटा. इट्स अ डायरेक्ट क्वेश्चन, गाइस, अ जनरल आंसर. और जनरल आंसर इज सच, गाइस. क्वेश्चन नंबर 27 कुछ नहीं है बेटा. वी जस्ट हैव टू राइट द थ्योरी पार्ट ऑफ दिस. थ्योरी पार्ट लिखना है बेटा और कुछ नहीं है. फॉर टू पार्ट ट्रांसफर प्राइसिंग सिस्टम you'll see exactly what I wrote as such, guys. That is only mentioned here. You guys can go through question number 27 beta as homework. I will solve question number 28, 29, 30, 31 in the next class. We'll also start off beta international transfer pricing. International transfer pricing case studies hai beta thode, but they're all simple, guys. They're not that complicated as such, guys. We also have value chain analysis. Most likely beta we'll be done with all of this, guys, in just 2 classes. Okay, yes sir, very clear about it. I'll see you guys in the next class as such beta. All the very best. Keep studying as such, guys. I'm telling you all the very best as such beta, so that you wake up again as such beta in the morning. Be motivated as such, guys. Be inspired. And then yes guys, have a good day. Bye bye.